Hello, my name is Stepan, and I'm going to explain why I believe Adobe stock is overvalued. Adobe develops and distributes a wide range of computer graphics and online marketing analytics software. In 2012, the company began transformation to a subscription-based model by introducing cloud versions of its software. Following that came a sudden decrease in revenues, which is vividly reflected in sales growth, CFROI, and asset growth charts. In fact, all these three metrics have been showing a declining trend since 2010, with sales growth being among the lowest of its peer group. The HOLT warranty price, which is calculated based on these metrics, also decreased sharply when Adobe switched to a new business model. At the same time, the market price continued to rise. Now we can see that the CFROI level derived from the current market price is above the estimates. Coupled with the decreasing ability to generate wealth, this made Adobe stock increasingly more expensive compared to its peer group, which is well reflected in the charts for economic PE and price-to-book value. The price comparison chart shows that the stock has been consistently overvalued despite the declining trends in the three key valuation metrics. I suggest that this overpricing is a result of high expectations that the market has for cloud software companies. It is well known that recently software-as-a-service companies have been gaining popularity among investors and, as a result, inflated valuations. Revenue from subscriptions is recognized over a longer period of time than it does with conventional licensing, which means that Adobe might increase its sales growth. On top of that, the company has launched a new stock photo service and reported a higher than estimated increase in subscribers numbers in the recent quarter. The main risk for Adobe is intense competition in the software industry. Graphics editing software is more accessible than it has been before, and it is easier for smaller companies to disrupt large businesses like Adobe. Integration of newly acquired businesses also increases operational risk. In a scenario where Adobe's CFROI and asset growth will considerably increase compared to estimates, the stock price will be $53.67, which still has 33% downside. Even if we assume a very optimistic scenario where Adobe will increase its sales growth to previous levels during the upcoming 5 years, the stock price will still have 23% downside. Using current consensus earnings estimates to derive cash flow forecasts, we can calculate a warranted price of $44.55. This is why I believe Adobe stock is overpriced.